like the NACIN, the Direct Taxes Regional Training Institute, the AGS Office Regional Training Institutes, and also various forums like CII, MCCI, so on and so forth. He is also a regular faculty in ICAI as well as the Cost and Management Accounts Institute. With this brief introduction over this eminent faculty, I now request Sathya Kumar to take over and handle the session. Over to you, sir, please.
Thank you, Stewardson, sir. Am I audible to all of you?
Yes, sir, perfectly.
Yeah.
Audio and video are here.
Thank you so much. I first of all thank the Director General KSSV Prasad Prasad sir for giving this opportunity to address a prestigious institution in India. Thank you, Stewardson sir, for this wonderful opportunity, and a great the organization as such has put forth this session, and thank you so much for this wonderful opportunity. Getting to the topic, valuation is a most important topic in the GST scenario, because the entire tax collection, is dependent upon the value of the supply. So we all know that. So if you ask a general public, they'll say any value that comes on the invoice is that value that will be attracting GST. But as a professional, as someone as we are dealing with the GST day in day out, it is important to understand the concepts and intricacies behind the value of supply of goods and services. Stewardson sir, how many minutes I have to address at a stretch?
Sir, you can start now and then end at 11:30.
Okay.
We will have a bio break for 15 minutes.
Yeah.
And then from 11:55 to 1 o'clock you can go ahead.
Thank you, Stewardson sir. If you see, every taxation statute makes provision for determination of value. As any taxation, you take up any taxation whichever was prevailing in India, whether it is central excise or value added tax which was prevailing in the respective states, everywhere the matter that was disputed and that was that required attention from both revenue as well as from the client perspective and the profession's perspective was the value, because the value is the number based on which tax is normally payable. And if you see in GST, mostly the tax, if you see in the indirect taxes, tax is based on ad valorem basis. This is a technical word. I'm presenting the subject without PPT, because if people can take down, it will be wonderful, the key points, and later point of time after the session, I'll share the entire structure of presentation. So the technical word that we need to understand, and everybody knows that, is ad valorem basis. In GST also, in most of the, not only in India, across the world, the value of the taxable, be it in the service tax scenario, taxable services, or now under the GST, taxation happens on the value of supply of goods and services. And not only that, tax is payable on ad valorem basis. That is the percentage of, am I audible? Percentage of value of supply of goods or services. But in terms of chargeable section 9 of the CGST Act, I am highlighting section 9 because the same section is replicated as part of other acts as well, SGST and UGST as well. I will highlight shortly. Section 9 of the CGST Act, GST is leviable on supply of goods or services or both. So GST is leviable on supply of goods and services or both. We all know that in GST, it is not sale, it is not leasing, it is not provision, it is a provision of services, it is a supply. Supply includes entire gamut. We all know that basic thing. In fact, in VAT, it was dealer who was getting attracted under the VAT scenario. But under the GST, it is tax leviable on supply of goods or services or both. But what is exempted under section 9, very important point to be noted, is the except alcoholic liquor for human consumption. we all know well, the petrol, diesel and all those items are within the GST, but they are not notified under the GST. Moment it is notified under the GST, the central excise or the VAT that is applicable on the petrol and diesel will not be applicable going forward. But whereas with respect to alcohol for human consumption, I repeat, whereas with respect to alcohol for human consumption, under section 9, it is specifically provided that GST is a tax leviable on value determined under section. So in section 9 of the CGST Act, it is said that GST is a tax leviable on supply of goods or services or both, except alcoholic liquor for human consumption on value determined under section 15. What section 9 says is the value has to be determined as per section 15 of the CGST Act, Central Excise CGST Act. So that means, so what we need to understand is alcohol for human consumption is not within the GST. Accordingly, section 9 provides clear indication that it should not be, the valuation principles are not applicable to alcohol for human consumption, but it is applicable to all other products. Many of the times the question that people raise is what happens to the petrol and diesel? I already told you, petrol and diesel, until it is notified under the GST, it will be valued as per the central excise rule, as central excise rules and central excise act with respect to central levy, and with respect to state levy it will be valued under the VAT. Moment it is brought and notified under the GST, then the valuation section 9 chargeability section will apply to petrol and diesel as well. With respect to alcohol for human consumption, we all know it is kept away from GST. It is kept away from GST. If we want to bring alcohol within the purview of GST, we need to actually pass amendment bills to bring the alcohol under the GST, considering alcohol for human consumption. So considering it, so alcohol is not covered under the valuation, under the GST. And on a value determined, how do you determine the value? It is provided under section 15 of the CGST Act. The process of valuation of the goods or services is provided under section 15 of the CGST Acts. Besides payment of tax, it is very important to note, valuation is also important for determination of issues like threshold limit for availing exemption. For example, you have a threshold limit. So until the threshold limit, there is a specific exemption that businesses or the entities need not register for GST. So it is very important. So we should not just think that valuation is only applicable with respect to determination of tax payable, GST payable, but it is also important for the purpose of determination of what the exemption limit as well. So it is very crucial for determining the exemption as well. And second thing, threshold limit for opting composition scheme. And it is also important for the purpose of monthly or quarterly filing of returns, and beyond that it is also important for determining the requirements of the e-way bill, etc. So valuation is just not for the purpose of tax collection point of view, but it is also from the perspective of the compliance point of view under the GST Act. So it is very crucial. That means out of all the provisions in the GST we may have, which is procedural, what is most crucial thing under the GST is the valuation. And under the valuation, as KSV Prasad sir was mentioning, what to be added, what to be deducted. There is a skeleton provided by the GST Act. But this skeleton has lot of clarification, and there are lot of AAR ruling. I am going to discuss some very crucial authority for advanced ruling clarifications and departmental clarification, and there are certain precedents that we can take even from the Central Excise Act, based on which the department has clarified many of the scenarios or the situations even under the GST, taking precedence from the previous act as well, because even under the previous act it was based on ad valorem basis. So whatever the previous judgments, whatever the precedence that was which was there in the previous act, apply with respect to those matters where there is a relevance under the GST. So we need to understand the resources, the clarification provided, certain clarifications provided under the Central Excise Act will also be applicable even under the GST scenario. Those are all department clarification. So I will try to highlight those clarification as well. For example, take for example the Fiat case. The Fiat case, it was a Supreme Court judgment. So where the department went on to give clarification post that judgment, and there was an amendment brought under the union budget as well. So considering it, it is very, very important to understand the structure of the valuation of supply of goods and services. So the 3 points that what we have understood in the first part of the discussion, in the introduction part of the discussion, is valuation is based on ad valorem basis. Ad valorem basis. 2, valuation is determined as per section, the chargeable section is section 9 of the CGST Act. Section 9 of the CGST Act. And third point is GST is tax leviable on the supply of goods or services except the alcohol for human consumption, and the value is determined as per section 15 of the CGST Act. Now what is important now under the valuation is to understand section 15 of the CGST Act. Section 15 of the CGST Act is under chapter 4 of the CGST Act under time and value of supply. Under that section 15 comes, and under that section 15 we have the structure for value of taxable supply. Structure for value of taxable supply. And this value of taxable supply determined as per section 15 is also applicable to the IGST Act vide section 20 of chapter 9 thereof. Even under the IGST Act, section 15, the process of section 15 is applicable even under the IGST Act. Very important point to be noted. So by understanding section 15, you will also understand the perspective from the IGST Act. 2, you will also understand section 21 of the UTGST, that is Union Territory Goods and Service Tax, and which is under chapter 9. So under chapter 9 of the IGST Act and vide section 20, for the purpose of IGST you determine the value as per the process levied under the as per the process of section 15 of the CGST Act. And also there is section 21 under chapter 9 of the UGST Act, under which also the value is determined with the same process and clarification what we have under the CGST Act. So how do you determine the value? So how do you determine the value? Value of taxable supply is charged. Value is charged for tax, and value of taxable supply is determined as per section 15. To help section 15, there are about 3 broad rules provided under the rules, GST rules, CGST rules. To help section 15, there are about 3 important rules provided under the CGST rules, chapter 4 of the CGST rules. What is those rules? It is for the purpose of determination of value of supply. Section 15 provides for value of supply. How do you determine? The determination process is provided under Rule 27, Rule 28, Rule 29. I repeat, the main section is section 15. It provides for value of taxable supply. To help section 15, there are 3 broad rules: Rule 27, Rule 28, Rule 29. So people who wanted to note down, you can note down. The entire reason that I did not provide for PowerPoint presentation is to make sure that you visualize the structure of the act, so that we can keep on visualizing the subject. Later point of time we can go into the details, but understanding and getting into the perception is very, very important. So perspective is important. So I am trying to provide the structure. To help section 15, there are 3 rules: Rule 28, Rule 27, Rule 28, Rule 29. Rule 27, I quote, is for the purpose of value of supply of goods or services where the consideration is not wholly in money. So rule 28, see we all assume that when you buy a product, general public assumes they go to the shop, they pay money and get the product and they pay the GST. But in most of the cases, it is not a usual scenario. It is not a usual scenario. In most of the cases, value of supply of goods and services, the consideration is not generally wholly in money. Where the consideration is not wholly in money, then rule 27 applies for section 15, and we determine the value of supply of goods or services where the consideration is not wholly in money. That is rule 27. In rule 28, the next rule provides for value of supply of goods or services or both between distinct or related persons other than through an agent. Very, very important point to be noted. Whenever there is a transaction, I will say related party transaction between related persons, related party transaction with a related person, then in that case, how to determine the value of goods or services, value of supply of goods or services is provided under rule 28, is provided under rule 28. Under rule 29, so rule 27 we understood. What is rule 27? Value of supply of goods or services where the consideration is not wholly in money. Where the consideration is not wholly in money, then rule 27 applies. Rule 28 applies where value of supply of goods or services or both between distinct or related persons other than through an agent. If it is through an agent, then this rule 28 does not apply. Very important point to be noted. If it is a direct transaction between the related person, then rule 28 will apply, and value of taxable supply or service supply of goods or services is determined as per rule 28. The rule 29, very, very significant rule under chapter 4 of the CGST rules, is value of supply of goods made or received through an agent. It is separately covered because under rule 28 the value of supply of goods or services or both between the related persons is covered, whereas under rule 29 value of supply of goods made or received through an agent is covered under rule 29. So these are the three significant rule under chapter 4 of the CGST rules, which is for the purpose of determination of value of supply. Of course, there are other rules as well. I will highlight the other rules as well, but these three rules are basic and very, very important rule under chapter 4 to understand what could be the possible transaction which requires insights and issues in the value of supply of goods and services. Now let us move on to the other rules. Rule 30 provides for value of goods or services or both based on cost. Rule 30 provides for, these are all situations and possibilities. We must understand these are all situations and possibilities. Our entire understanding will revolve around section 15 and from rule 20, the three significant rules, rule 27, 28 and 29. Of course, there are other rules from rule 27 to rule 35. Out of this, all the rules, first three rules are very, very important, and of course, rule 30 provides for value of supply of goods or services or both based on cost. Rule 31 provides for residual method for determination of value of supply of goods or services or both. So there are residual methods provided under rule 31. Under rule 31A, value of supply in case of lottery, betting, gambling and horse racing is provided under a separate rule called rule 31A under chapter 4 of the CGST rules with respect to determination of value of supply. And if you see rule 32, it provides for determination of value in respect of certain supplies. So certain supplies are notified under rule 32, wherein it provides what is the way to determine the value of. It provides a certain kind of a process to determine the value of in respect of certain supplies. And rule 33 provides for value of supply of services in case of a pure agent. This pure agent concept, we all know it as relevance in even the previous indirect taxes regimes. Even under the service tax it was there. So even under the GST Act, as part of the rule 33, the value of supply or of services in case of pure agent, how to determine the value is provided under the GST rules. And rule 34 provides for rate of exchange of currency other than Indian rupees for determination of value. Rule 35 provides for value of supply inclusive of integrated taxes, central taxes, state taxes and union territory tax. Value of supply inclusive of integrated taxes, central tax, union territory tax. So this is provided under rule 35. So that means along with section 15, the determination of the value of taxable supply, we also must understand from rule 27 to rule 35, which is providing the entire combined reading of section 15 and along with the rules provides for the entire structure for the determination of the value of goods and supply. Now let us move on to the next important area of discussion. I will start providing the, I'll try to provide illustrations and try to provide insight into it so that you understand the departmental clarification as well as the AAR ruling with respect to the valuation of supply of goods and services. We just revised what is the structure of the value of supply or services. I just wanted to understand, is there any question from the participants before I move to the issues basis of valuation under the GST regime under the transaction value? Being an online session, only when I hope that am I audible to all of you?
Yes sir, you are perfectly audible sir.
Is my voice clear?
Yes, voice is clear, seamless, no issues.
Thank you, Stevenson sir, thank you. My dear participants, before we understand the value of goods or services, it is very important to understand. If you see in rule 27, it is said that value of supply of goods or services where the consideration is not wholly in money. The word consideration is used. That means consideration is essential under the GST. Now what is this consideration? The definition of the consideration is provided under section 2, subsection 31 of the CGST Act. I repeat, section 2 subsection 31 of the CGST Act defines the term consideration, and I can quote the definition, but I restrain myself in quoting the definition, but I will try to provide the summary of what the definition provides. Because under rule 28 section 15 read with rule 28, if you see, it clearly talks about consideration. That means consideration is an essential part of the value of taxable supply or services. That means what is a consideration? Consideration is broadly divided into two categories. One is monetary consideration, the other is non-monetary consideration. I repeat, consideration is broadly classified into monetary consideration and two non-monetary consideration. It is very important. This is a very important point to be understood under the GST, especially when you are understanding the value of supply of goods and services, that it is to be noted the definition of consideration is just not restricted to amount paid in money. If it is money, then it would have mentioned it is money only. But the rule 28, if you see, it clearly provides what is the value of supply of goods or services, even in those cases where the consideration is not wholly in money. Wholly in money. That means there is a non-monetary consideration is also considered under the types of consideration. So, but extends also in the definition, if you read the entire definition under section 2, subsection 31 of the CGST Act, the term definition even includes and extends to cover in-kind consideration as well, covers in-kind consideration as well. Accordingly, the types of consideration are monetary consideration and non-monetary consideration. Under the non-monetary consideration, it is very important to understand what is a monetary consideration. If you go through the definition, we can understand that the monetary consideration includes currency, check, promissory note, letter of credit, draft, pay order, traveler's check, money order, postal remittances, other similar instruments, but does not include what? What does not include, even under the monetary consideration, there is an exception provided under the definition. What is the exception? This is a point to be noted. The definition provides certain, as excluded, certain things from monetary consideration. This is an issue to be noted. It does not include currency which is held for numismatic value. I'll explain the numismatic value later point of time, but understand numismatic value, the currency of which is held for the numismatic value is not considered under the monetary consideration. 2. Non-monetary consideration. In non-monetary consideration, what is included? It is like a mathematical formula. This consideration itself is like a mathematical formula. If I say monetary consideration, immediately you should develop a cognitive ability to understand that it includes currency, check, promissory note, all types of instruments except the currency which you are holding for its numismatic value. This should run in your mind. If I say non-monetary consideration, under the non-monetary consideration, which includes goods or services supplied as payment. For example, in a barter, let's get back to the olden days of concept of barter, including part exchange, and in the case of services, this may include giving up a right, refrain from doing something, or agreeing to tolerate an act. So with respect to goods, you are giving a good and you are receiving a good, you are giving a laptop and you are receiving a printer. This is a barter transaction effectively. This barter transaction is covered under the GST because it is a consideration in the first place. As it is a consideration, it is included as part of the value of taxable supply or services. And how do you determine this value? Who provides the, what is the way out? What is the process of, how do we include this value? Rule 28 comes and helps you in determining the value of the supply or services where the consideration is not wholly in money. Not wholly in money. In those cases, it is covered under Rule 28. So, goods or services supplied as payment, for example, in a barter, including part exchange, and the case of services, this may include giving up a right. So, with respect to services, it is including giving up a right. You are giving up a right, that is also a consideration. You are refraining from doing something, that is also a consideration. You are agreeing to tolerate an act. You are agreeing to tolerate an act, and that agreement to tolerate an act is also a consideration for the services. So you must understand that it is the implication of consideration is as a broad perspective. There are multiple issues that could come up in the future even under the consideration. Take it from me. For the next 5 years, writ petitions will be the model that will be followed by the many of the clients across the country to question on law and question on the issues, because these are all broad definition which requires clarification, which requires insights and deep perspective to understand. In fact, I understand even European cases will be referred in the days to come because we have a precedence in the European cases. So understanding this perspective is very important to understand the deep implication of what is consideration, monetary consideration, non-monetary consideration, under the monetary consideration what is included, under non-monetary consideration what is included. My dear friends, let us now get into, we have understood the consideration. It is provided in section 2, subsection 31, subsection 31 of the CGST Act. Alright. Now let us get into the next level of discussion, next part of the discussion. I'm coming to the third part of discussion. The first part of discussion was the introduction to the value of supply of goods or services. Second is with respect to section 15, highlighting section 15, and then with respect to the highlighted about the rules. And then along with that I also clarified what is a consideration. Now let us understand the third part of the discussion, very important part of the valuation. The basis of valuation in the GST regime is the transaction value. The chargeable section 19 of the CGST Act states, I quote exactly the same words. Chargeable section 9 of the CGST Act states that, I quote, there shall be levied a tax called Central Goods and Services Tax on all intrastate supply of goods or services, or both, except on the supply of alcoholic liquor for human consumption on the value determined under section 15 of the Act. This is what I told you in the introduction as well. If you ask me what is the corresponding section under the UGST, is section 7 of the UGST, and what is the corresponding section of the IGST, it is section 5, and corresponding provisions could also be there of the respective states GST. That means it will effectively be the same process. So by understanding section 9, section 9 and section 15, you will understand the corresponding section of the other respective laws as well. In terms of section 15 subsection 1, I'm going to deal with subsections of section 15. So section 9 talks about the chargeability. Section 15 talks about value of taxable supply or services. In terms of section 15 subsection 1, I repeat, section 15 subsection 1 of the CGST Act, the value of goods or services, very important, goods or services or both, shall be the transaction value, which is nothing but price actually paid or payable. Very important, paid or payable. Even those payment that are yet to be made, the payable is also covered for the said supply of goods or services, or both where the supply and the recipient of the supply are not related. So when is the transaction value taken? The transaction value prima facie is taken when the supplier and the recipient of the supply are not related, and the price is the sole consideration for the supply. Price is the sole consideration of the supply. So therefore, to summarize, under the GST law, taxable value is the transaction value. In all given situation, taxable value is transaction value. Taxable value is transaction value, that is nothing but price actually paid or payable, provided two conditions are satisfied. What are the two conditions? The two conditions are supplier and the recipient of the supply are not related, and condition 2, price is not the sole consideration. The very important point to be noted here is, under section 15 subsection 1, both the conditions are cumulative, and it is not or, it is and. That means both the conditions has to be satisfied. That is, supply and recipient of supply are not related, they should not be related. And the second condition is, price is the sole consideration. In any of these conditions are missing, then section 15 subsection 1 transaction value will not be taken into consideration for the purpose of determination of the GST, the tax payable under the GST. Am I clear to everyone? Is there any question, so that I can clarify the question and move forward?
Hello?
Yeah, am I audible?
Yes, sir, you are audible, sir.
Shall we go ahead?
You are audible.
Yeah.
Yeah, no.
Yeah, right. So value of goods or services under the pre-GST regime has seen several litigations. Several litigations have happened even with respect to the transaction value. I am going to highlight, even before GST came, always this transaction value was disputed under even the previous indirect taxes regime. So GST is not going to be an exception. Let us deal with these issues now. We will start with discussing issues. First, what is the essence of the term price actually paid or payable for supply? What is the essence of the price actually paid or payable for supply? Since the price actually paid or payable for the supply of goods or services is to be considered as a transaction value for the purpose of chargeability of GST under section 9. Thus, in most of the cases of the regular normal trade, the invoice value will be the taxable value. So that's what I told you in the beginning of the session. If you are going to ask somebody how the GST is determined, you will say invoice value invoice value, we have to pay GST. But however, this invoice value or the transaction value can be taken only if both the conditions are satisfied. What are the two conditions? The first condition, supplier and recipient of the supply are not related, and two, price is the sole consideration for the price is the sole consideration. Let me give an example. Let me give a scenarios so that you understand. Visualize. XYZ Limited sold goods to Mr. A for 1,50,000 rupees. 1,50,000 rupees. Here the value of supply will be INR 1,50,000 rupees because it is invoice value. Invoice value is equal to taxable value, and that invoice value is a transaction value. And when will the transaction value be taken? When two conditions are fulfilled. What are the two conditions? The two conditions are supplier and recipient of the supply are not related, and price is the sole consideration of the transaction. However, it is very important to note, I will give yet another example to explain you. ABC and Associates provides legal opinion to XYZ Limited on their taxation matter, and the professional fee is 50,000 rupees. Now, what is the value of supply of this service? The value of supply of this service is 50,000 rupees. When will this 50,000 rupees will be considered as the value of service? Only when two conditions are fulfilled. What are the two conditions? The first condition is supplier and recipient are not related, and two, price is the sole consideration. Only in these two scenarios, when two conditions are fulfilled, it will be covered. However, to determine the value of certain specific transactions like sale or purchase of foreign currency or services of air travel agent, in these cases, this is an exception, this is an issue to be noted by all the authorities here. However, to determine the value of certain specific transactions, these are specific transactions with respect to determination of that value, like sale or purchase of foreign currency, services of air travel agent, those transactions which are not covered under transaction value concept, like supply between related parties, where consideration is not only in money, parameters have been put across under section 15 and 4 and section 15(5) of the CGST Act. So there are specific transactions which are covered under section 15 subsection 4, section 15 subsection 5 of the CGST Act. So essence of the term price actually paid or payable for supply is invoice value. But however, even under the certain transactions where there are exceptions, like the certain specific transactions like sale or purchase of foreign currency, services of air travel agent, in all these situations there are certain exceptions to be drawn. Of course, if you refer to section 15 subsection 4 and section 15 subsection 5 of the CGST Act, this will be clearly understood. Let us move on to the next issue under the GST. When GST came, I vividly remember I used to address across the nation, from Tinsukia to Thoothukudi to Delhi to Mumbai. I used to address in different professional platforms. And while I was addressing, very important question that was asked by everyone around the country at that point of time I'm talking about. Now people have got clarity. Was what will happen to the MRP? What will happen to the MRP based valuation? Let me clarify, under the GST, there is no MRP based valuation concept in GST. Very important. The complete transformation with respect to the previous regime of the indirect taxes under the GST is that the shift that has happened, that there is no MRP based valuation concept under the GST. Very important point to be noted. Now, what does it mean? Very important. Let me explain you. No MRP based valuation under the valuation concept under the GST. If you see section 4A, I went on to see yesterday when I was preparing for this session. I went back to the olden. I took the old book and then I checked what was permitted under the MRP based valuation. I again revised. I noted, unlike section 4A of the Central Excise Act 1944, which permitted certain goods on which central excise was levied based on their MRP, and when I looked at the computation model under the central excise, it was MRP less abatement. So abatements used to be prescribed actually. There may be changes in the abatement. The abatement will be provided at different points of time. They have revised the abatement percentage based on even products. No such provision finds place under the GST. So the concept of MRP based valuation is not applicable under the GST. Is not applicable under the GST. But you will have a doubt. Sir, in the biscuit packet that I buy, there is an MRP. Do you mean to say that the GST is not applicable because it is MRP is printed, it is illegal? Answer is, I would like to provide a clarification here. This to say, GST law provides a uniform basis for valuation. GST law provides for uniform basis for valuation, does not make a distinction between basis of nature of goods, be it packaged or non-packaged. So when was the MRP model? MRP was applicable for the packaged goods. But under the GST, if you see under the Central Excise Act 1944, under section 4A, we had a MRP where MRP less abatement provisions were applicable. But under the GST law, this to say that the GST law provides a uniform basis for valuation. And does not make a distinction between packaged and non-packaged goods for the purpose of valuation. Now, even when product is packaged or intended for retail sale to customers bearing MRP, the concept of MRP is not from the Central Excise or from the GST, but the concept of MRP is provided under the Legal Metrology Act 2009. Very important. So the requirement to place MRP on a product, the requirement to place MRP on this book, requirement to place MRP on air condition, requirement to place MRP on laptop comes not from the GST but comes from the Legal Metrology Act 2009. But however, if you see, GST will be levied based on price actually paid or payable irrespective of what is declared as MRP. So very important point to be noted. Even if the MRP is provided in the laptop, in the air condition, in the notebook, in the watch, in the pen that you may buy, or any of the packaged product that you may buy, because when you pack, then it attracts Legal Metrology Act 2009 and MRP you may find. That means MRP is not the process of valuation under the GST, but the process of valuation under the GST shall be levied based on price actually paid or payable irrespective of what is declared as MRP. Let me give an example. Visualize this situation. Mrs. XYZ Electronics sold washing machine bearing MRP 50,000 rupees. MRP 50,000 rupees. The washing machine was bearing the MRP of 50,000 rupees. It's packaged. So Legal Metrology Act 2009 will apply to Mr. A. To Mr. A for which the MRP was 50,000, but it was sold for 48,000. The value of supply in this case shall be 48,000, and that is the transaction value, price actually paid or payable. And now, when is the transaction value taken? When two other conditions are satisfied. The supplier and the recipient are not related, and price is not the price is the sole consideration. Then the transaction value is taken. Here, MRP is not taken. The price actually paid or payable is taken, and accordingly, the transaction value is taken for the purpose of determination of GST and not the MRP based valuation. So the tax payable is clear on the taxable value and not based on the MRP. The MRP may be printed, but even if the MRP is printed for 50,000 rupees, but the GST is charged on the price paid or payable. Let's assume, take a scenario where you buy a product in Amazon. You go to Amazon, for example, I bought a Sanyo air condition recently for my office, and when I went and booked Sanyo air condition in Amazon, I found that the MRP of that product was 39,000 rupees, but I got a discount of about 8,000 rupees, and let us get into the discussion about discount shortly, but what I paid was 29,999 and I got the product delivered at my office. Now, this 29,999 is the transaction value on which I have to pay GST. So accordingly, when I see the Amazon bill, I can find the GST is levied on not on the MRP, but MRP is not the inclusive of the GST, but it on the transaction value that I paid, that is the invoice value. And two important condition: I am not related to Amazon anyway, so the transaction is between the supplier and the recipient who are not related, and I paid in using my card. Then the consideration is solely paid or payable in money. Accordingly, the value of that AC is nothing but the invoice value on which I paid the GST. So this is an important point to be noted. Is there any question on MRP based valuation, so that I will move forward to the next area of discussion?
Sir, I don't find any questions in the chat box as at this time. So probably I think we can keep moving, sir.
Yeah, thank you, sir. I hope my delivery is clear, sir.
Yes, clear.
Thank you, sir. Thank you, sir. Let us move on to the next important condition. So we have understood that what is the essence of the term price actually paid or payable for supply, and second thing that we have understood that no MRP based valuation concept in GST. So no MRP based valuation under the GST. Now let us go deep into two other important aspects impacting section 15. Section 15, section 9 and section 9 provides for value determined as per section 15, and section 15 subsection 1 says the two conditions has to be fulfilled to take the transaction value. The condition 1 is nothing but supply and recipient of supply are not related. What is this concept? Let us dwell into it. Let us understand it. It has a complete, you need to have complete control on this condition. So definitely there are a lot of departmental clarification on this. There are different scenarios we may have to understand in these two conditions. First, let us understand status of the parties involved in a transaction is very, very important. Very, very important. Status of parties involved in a transaction is very, very important. Whether they are related or not is one of the pivotal factor. Whether they are related or not is one of the pivotal factor in determining the applicability of transaction value concept or valuation rules for valuing a supply of the charge of the GST. Is this the relationship, the perspective of related person? Is it only there in GST Act? The revenue authorities are skeptical when there is a transaction between the related persons. When I say revenue authorities, even under the Income Tax Act, you go and see the transfer pricing regulation under the Income Tax Act, The entire transfer pricing regulation and the international taxation perspective is to check who is an associated person. If you go to Companies Act 2013 and if you see section 188 of the Companies Act, you will understand that section 188 provides for related party transactions. Who is related, who is relative is provided under the Companies Act. If you go to the prohibition of the Benami Property Prohibition Act in 1988 and the amendment, read with Amendment 2016 amendment, you will understand there also related persons are having a greater importance. And any other regulation, if you see, related parties have always been a watch out and people have been skeptical. Even if you see 2009 Sathya M scam, it is all planned through related party transaction. The entire Companies Act got amended because of the related party transaction. So that means GST is not an exception. In GST also, related persons are always, when there is a transaction between related person, it is not normal. That is what is the understanding. Even if the transaction is normal transaction, even if the transaction is at the transaction value, when it is related person, the revenue authorities are always skeptical. Now, the point to be noted here, the status of parties involved in a transaction, whether related or not, is one of the pivotal factor in determining the applicability of the transaction value concept or the valuation rules for a valuing a supply to charge GST. Now, the point to be noted, there is an explanation under section 15, explanation A to section 15 of the CGST Act. Section 15 of the CGST Act is about value of supply of goods or services. Under that, there is an explanation A where it provides person shall be deemed to be related person. Person shall be deemed. It's a deeming provision. Person shall be deemed to be a related person. Person shall be deemed to be a related person if they are officers or directors of another business. Officers or directors of another business. Officers or directors of another business. This definition, this word officer has a wide definition, has a wide implication. And directors, of course you know director in a company or whatever, but officer definition is provided under the Companies Act. So it is very important, not only we know the GST Act, it is also important that we must know the Companies Act 2013, the definition of officer and directors of another business as well. 2, they are legally recognized partners in business. If they are legally recognized partners in business, then both the supplier and recipient are considered as related persons. In the first scenario, if they are an officer, or if they are directors of one another's business, then they are related person. There is a company here, there is another company here, the directors are related, that company's director is related to that company, then that transaction is between the related persons. It is just not the director, even the officer, the definition provided under the Companies Act 2013, because that is that involves a lot of discussion, but I am trying to highlight the definition of an officer is provided under the Companies Act 2013. That those people who are covered under the definition of the officer, even KMPs, key management personnels, or the manager or the managing director, all those officers who are part of the definition of the Companies Act 2013 with respect to the officer definition is also covered under the related person under the GSTs. 2, they are legally recognized partners in business. 2, such partners are employer and employee. Such persons are employee and employer. If it is an employer-employee relationship, even then it is a related person. Any person directly or indirectly owns, very important, any person directly or indirectly owns, it is not about just owning, controls or holds 25% or more of the outstanding voting stock or shares of both of them, or shares of both of them then in this scenario as well, it is a related person. For example, there is a transaction between a supplier and a recipient. The recipient is directly or indirectly, very important point, even beneficial ownership is covered for the purpose of related persons. Beneficial ownership is also covered for the related persons. Even in that case, any person directly or indirectly owns or controls or holds 20% or more of the outstanding voting stock or shares of both of them, then in that case, if there is a transaction between the company supplier and the recipient who is a person, any person directly or indirectly, any person, it is very important, legal person is also included. So legal person is also included. So if there is a transaction between supplier and the recipient, and in that case it is a related person, and accordingly it is covered. Next scenario, one of them directly or indirectly controls the other. This control is very, very important. What is the term control mean? There are different forms of control. Based on the direction of a particular person, only the entire company or the entity operates. How can that be established? That is subjective. But however, the control certain times can be established through board of directors meeting, or the direction through which the entire company is operating. All those things establishes the control. This control is has a wide implication, and it requires broader understanding. So accordingly, one of them directly or indirectly controls the other. Again, the wording used is, it's not a direct control, even the indirect control is covered under the GST. Both of them are directly or indirectly controlled by a third person. Even if both of them are controlled by a third person, then even in such situation, GST, even in the situation, the transaction is between the related person. So now how do we establish? Establishing the relationship or the control between two persons itself is difficult. But how do we establish that the third person is a common controller for both of them is a great question that everybody has, but there could be some scenarios which could emerge while the authorities may look at the transactions of the entities or between the persons. Then together they directly or indirectly control a third person. So here third person controls them. Now both of them control a third person. Even that scenario is covered under explanation A to section 15 of the CGST Act, and it is deeming provision. We have to understand it's a deeming provision. Finally, they are the members of the same family. And this also ensures that they are related person. Almost there are 8 conditions, 8 situations I would say, under which the supply and recipient, the condition supply and recipient are related is provided under explanation A to section 15 section 15 of the CGST Act, and shall be deemed to be a related person. Now very important point to be noted, there is a clarification, initially there were questions whether I also told person includes legal person as well. How did I say this? It is provided under explanation B to section 15, where it provides the term person also includes, it's not an exclusive definition, it's an inclusive definition, includes legal person. Accordingly, even legal person is included. Okay, there is yet another important point to be noted under explanation C to section 15. Explanation C to section 15 is person who are associated in the business of another is the sole agent or distributor or sole concessionaire, however described of the other, shall be deemed to be related. It is also provided under explanation C to section 15. I will provide some examples shortly. You can visualize the situation. Now, apparently if you look at the definition of related person in GST, is quite wide to cover two persons wherein one directly or indirectly controls the other, and also if both these persons are directly or indirectly controlled by a third person. This is a very tricky situation. The term used in these clauses is control. I already told you the control has a wide implication, and whenever you see control, then you must always think what is coming under control, where is the definition of control, how is the other person taking control, how is a company controlling another. It is just not through shareholding. There could be possibility of board of directors getting appointed. So there is always a possibility that there could be a significant influence through which the control can be exercised. So it is very important. In addition to shareholding, the control is said to exist. It is just not shareholding. It is just not the shareholding which ensures the control, but it is said to exist even if a person can exercise operational or legal restraint over the other. Legal restraint over the other, then in that case as well, control is said to exist. How do the authorities establish this concept of control as a greater is going to have a greater impact in the days to come? It is also prone for litigation. It is also prone for litigation. Mark my words, the word control is prone for litigation in the days to come is my understanding. Let me give you certain situations to visualize. I have given you the skeleton of the provision. I have given you the depth of the what is provided under the explanation. I have also provided you certain important point under the condition 1. Let me give you some examples to make you understand, to visualize the situation. Example A. Let me give an example. Mr. A is holding shares having voting rights of 25%. He is holding shares and his voting rights is 25% or more, 25% or more in XYZ Limited and ABC Limited. Then both XYZ Limited and ABC Limited shall be deemed to be related person in GST, because here the deeming provision is under explanation A to section 15, and it provides for voting rights for more than voting rights or more in voting rights and holding shares and voting rights of 25% according to their related person. Let me give you the second scenario. Mr. A is a major shareholder. Mr. A is a major shareholder of XYZ Limited. Is a major shareholder of XYZ Limited. And Mr. B is a major shareholder of ABC Limited. So A is a shareholder of XYZ Limited. Mr. B is a shareholder of ABC Limited. So A is a shareholder of XYZ Limited. B is a shareholder of ABC Limited. Visualize this situation. Mr. A, if Mr. A, let's assume, I give you this scenario. If Mr. A is appointed as an officer or director in ABC Limited, A is appointed in ABC Limited, who is the major shareholder in XYZ Limited as a director, and B is appointed as an officer, very important, officer or director in XYZ Limited, then XYZ Limited and ABC Limited will be treated as related persons in GST. Will be treated as related persons in GST. Let me get into the third scenario. ABC Limited plays a significant role. Third scenario, visualize. First scenario, I already told you about the shareholding and 25% of the voting right. Second scenario, I spoke about A is a major shareholder of XYZ Limited and B is a major shareholder of ABC Limited, and both of them getting appointed in respective companies. A getting appointed in ABC Limited and B getting appointed in XYZ Limited, and accordingly they become related person. The third scenario is ABC Limited plays a significant role in policy decisions. This is a very tricky situation. It's a very tricky situation for the authorities. A Limited, this scenario what I am going to explain is a tricky situation for the authorities. How do we regard somebody is related when he is going to intervene in the policy decision? How do we determine that is a question. So ABC Limited plays a significant roles in the policy decisions, quality control, HR planning of XYZ Limited. XYZ Limited. It must be said that ABC Limited controls XYZ Limited through policy decisions to be treated as a related person. How do we check this? We have to go through the audit report. We have to go through the audited financial statement. We need to go through the board report. Sometimes you need to look at the MD&A, management discussion analysis, and you may even call for the board resolutions, and you can even download from the company. Let's assume your authorities are wanted to determine whether they are a related person or not, you can go to the MCA website, pay 50 rupees, download the documents relating to the board resolutions and the resolutions they have passed, check whether XYZ Limited is exercising is influencing the policy decisions of the ABC Limited. Let us move on to the next situation. If ABC Limited and DEF Limited together controls XYZ Limited, then ABC Limited and DEF Limited shall be treated as related person to in GST. ABC Limited and DEF Limited together controls XYZ Limited. So they are not directly related. The situation here is ABC Limited and DEF Limited are not directly related, but they are controlling third person. And my dear participants, it is very important to understand. Person includes legal person. I keep reminding you because it is provided under explanation B to section 15. Now the point to be noted here is third company. So ABC Limited and DEF Limited is controlling XYZ Limited. They are controlling third person. Accordingly, ABC Limited and DEF Limited is related person. Let us move on to the next final scenario which I wanted to give you and make you visualize before the break. If ABC Limited, ABC Enterprises is sole distributor of goods manufactured by XYZ Limited. This scenario is nothing but the explanation C. I am explaining the scenario for the purpose of making you understand about explanation C to section 15, where it talks about sole distributor. In case of the sole distributor, whether he is related or not, that is the situation that I am dealing with. If ABC Limited, ABC Enterprises is sole distributor of goods manufactured by XYZ Limited, then ABC Enterprises and XYZ Limited shall be treated as related persons in GST. Related persons in GST. Okay. The insight that I wanted to provide as part of the first condition, we have almost come to the end of the first condition. Now, why are we discussing certain times when we keep moving on in depth in particular condition, we forget why do we discuss this? We are discussing this because to understand section 15, understand that we have a chargeability section under section 9 and then section 15 and the respective rules read together. And when do we take transaction value? We will take the transaction value only when they are not, supplier and recipient are not related and price is the sole consideration. Here, when is that they are deemed as related is provided under explanation A to section 15 of the CGST Act, and 8 scenarios are covered. I have tried to provide the situations for each of the scenario. And the last perspective that I want to drive to all of you, if supplier and recipient of a supply are related person in terms of the definition provided above, if they are related, what happens? Then transaction value shall not be taken. The transaction value is nothing but the invoice value, which is the taxable value, shall not be taken as the value of supply, and valuation will be done as per valuation rules prescribed under the CGST rules, which is nothing but rule 28 to 35 will get attracted. Rule 25 to 35 will get attracted. So that is when, if the condition, and please understand, the two conditions that is provided, which is for the purpose of transaction value, it is both conditions has to be fulfilled cumulatively. So any one of the condition gets violated also, we will move to rule 27 to rule 35, and accordingly the transaction value will not be taken into consideration for the purpose of valuation. So CGST rules will start applying, and accordingly we have to go through each of the scenarios. The next condition that I am going to discuss post break is condition 2. Price is the sole consideration. All of the authorities here, people who are attending from departments, the learned officers will know the condition 2 is the most important and most controversial condition, where price is the sole consideration. Price is the sole consideration, for which we have a Supreme Court judgment, and even the Union Budget came out with an amendment, and even the department has provided clarification. And this is a very, very interesting scenario that we are going to cover post break, and I am sure we are going to have an enlightened session post break. And I would request, if there is any doubts or any clarification and even discussion, I would like to have before we go for the break. We break for the bio break. Stevenson sir.
Yes, sir. Thank you, sir. Thank you for that first 60 minutes of wonderful session. You gave an overview of the entire gambit of the GST legislation with reference to the valuation. So I think we will have a bio break for about 15 minutes now and then reassemble at 11:45. Will that be convenient for you?
Thank you, Shivatan sir. Thank you. செகண்ட் செஷன் ஆரம்பிக்க போது சரவணன் வந்து என்னை பார்க்க வரணும், ஊர்காவல் படை. நம்மளோட அகாடமி மொபைல்லேருந்து கால் பண்ணேன். 99 சரவணன் தியாகராஜன் கால் பண்ணுவார் உங்களுக்கு டைம் கொடுக்கறதுக்கு. தியாகராஜன் இப்போ கால் பண்ணுவார் உங்களுக்கு டைம் கொடுக்கறதுக்கு, என்ன பார்க்குறதுக்கு. ஹலோ ஹலோ எஸ் சரவணன், இப்போது நான் வந்து காலைல ஹியரிங்கில் இருக்கேன், இது சரி ட்ரைனிங்கில் இருக்கேன், கவர்மெண்ட் மீட்டிங்கு. தியாகராஜன் இப்போ கால் பண்ணி உங்களுக்கு டைம் கொடுப்பார் 1:30. அவர்கிட்ட ஃபோன் பண்ணுங்கள், நான் மீட்டிங்கில் உட்காந்துருக்கேன். ஷோர், தேங்க்யூ. சரவணன் நம்பரு 9962244972. அவங்க எல்லாமே கமிஷனர்ஸ் ஜிஎஸ்டி அக்ராஸ் த நேஷன். அப்படியே ஃபுல்லாக இருக்காங்கடா, ஃபுல்லாக உட்காந்துருக்காங்க. இவங்க பாக்யதேவி இருக்காங்கல்ல, இவங்க அவங்க வந்து சேர்மன் ஃபார் நேஷ்னல் ஆன்டி ப்ராஃபிட்டிங் அத்தாரிட்டி. பக்காவாக இருக்குது, க்ளீனாக இருக்குது வீடியோ, நல்ல டம் ஸ்டக்காக இருக்காங்க. அப்படியே நல்லா இருக்குது. வெளில கேட்குதா நான் பேசுறது? நான் பேசுறது கேட்கல அப்படியா? ஓ, நல்லா ரெக்கார்ட் ஆகிருக்கு. நல்ல செட்டப் இது. எந்த செஷன் வேணால் பண்ணலாம், கிளாஸே எடுக்கலாம் இதுலேருந்து. ஆனால் லைட் ரொம்ப தலைவலிக்கும். ஆமாம். பார்க்கட்டும். Hello. Morning, sir. Yes, Bala, sir. Yes, sir. சரிங்க சார். சரி. PRO. கரெக்ட். ஆமாம். அஃபிஷியலாக தான் அவர் வருவார். அவர் அதாவது ஜஸ்ட் அப்படியே அவருடைய மாங்க்கில் தான் ட்ரெஸ்ஸில் தான் வருவார். அவர் வந்து மூவர் ஃபோட்டோ கொடுத்துருவார். மூவர் ஹோலி ட்ரையோ. ஹோலி ராமகிருஷ்ணர், விவேகானந்தர் அண்ட் சாரதா தேவி ஃபோட்டோ கொடுத்துருவாங்க. ஆமாம். கரெக்ட். புக்ஸ் கொடுப்பார். ஆமாம், புக்ஸ் கொடுப்பார். அது என்ன புக் கொடுக்குறாருன்னா சுவாமி விவேகானந்தா அண்ட் சயின்ஸ்ன்னு கொடுக்குறாரு. ஏன்னா ரேஷ்னாலிட்டி இருக்கிற மாதிரி இருக்கணுன்றதுக்காக. யா. சரிங்க சார். ஷோர் பாலா, ஷோர். நான் உங்களுக்கு திருப்பி ஒரு மணிக்கு கால் பண்ணுறேன் பாலா. இந்த மீட்டிங்கில், கவர்மெண்ட் மீட்டிங்கில் உட்காந்துருக்கேன் ஆன்லைனில். முடிச்சுட்டு நான் உங்களுக்கு கால் பண்ணுறேன் 1 o'clock. ஷோர். பரவாயில்ல பாலா, நோ ப்ராப்ளம் பாலா. தேங்க்யூ.
Sir, welcome back, sir.
Yeah, thank you, sir.
Is it okay for you to
Yes, sir.
listen now?
Yes, sir. We can.
Right.
Thank you, Mr. Watson, sir. Thank you so much. And now, let us move on to the second condition. The first condition is what we had discussed in detail, where we spoke about supplier and recipient of supply are related. Now let us move on to the second condition, which requires a detailed understanding. The second condition is nothing but price is the sole consideration. So now what are we discussing? So let me revise again. We are discussing about determining of the value of supply of goods or services, and the chargeable section is section 9, and value of taxable supply is determined as per section 15, and there are rules under the CGST which provides rules are from rule 27 to rule 35. Now accordingly, when is the transaction value taken into consideration? The transaction value is taken into consideration when two conditions are fulfilled. When two conditions are fulfilled. The first condition is where the condition number 1 is where the supply and recipient of supply are related, or not related, and price is the sole consideration. When will the transaction value not taken into consideration? Transaction value, to make you understand, is nothing but the invoice value, taxable value. When is it not taken into consideration? It is not taken into consideration when any of the conditions are not satisfied. The condition 2 talks about price is the sole consideration. Price is the sole consideration. It is very important to understand this in detail. I am going to discuss even a landmark judgment which actually the landmark judgment was brought in 2014, which still has an implication under the GST Act. If you see the condition 2, price is the sole consideration. Apart from parties to a transaction, of supply being non-related. So if they are related, then the transaction value will not be taken into consideration. And even the second condition has to be fulfilled, because condition 1 and condition 2 are not mutually exclusive but cumulative condition, because the word and is used. Accordingly, it is also essential that the price is the sole consideration. Price is the sole consideration for transaction value to be accepted as the value of supply. Accepted as the value of supply. In other words, in a simple word to understand, what is received or what is to be received should only be the price paid or payable. Price paid or payable to the supplier. No other consideration in any form, directly or indirectly, should be payable to the supplier for the supply, because supply is what is taxed under GST. So to the supplier, if you are paying price or price is paid or payable, only that is considered under the for the supplier to be taken into consideration. The probable scenario, let me give a situation for you to visualize. The probable scenario where price is not the sole consideration can be case where consideration for supply is not wholly in money. So I already told you, under section 2 subsection 31 of the CGST Act, consideration includes both monetary consideration and non-monetary consideration. If it is a monetary consideration, then price paid or payable. And what is monetary? I have already explained. Except the currency which you are holding for the numeric value, all other currencies are included. And what is non-monetary consideration also I have explained. Considering this explanation, you must I will give an example to visualize. For example, supply of new mobile phone in exchange of old phone and balance amount paid in monetary form. For example, you go to you go and hand over your old phone for the new phone, and the dealer or the supplier is what we call under the GST. The supplier says you pay the balance amount in that situation. Price paid is not the sole consideration. Then transaction value will not be taken into consideration. So even though it may be between the related and a non-related person, but price is not the sole consideration. Accordingly, that situation will not be considered. If price is not the sole consideration for supply, the valuation shall be done in accordance with the valuation rules from Rule 27 to Rule 35 of the CGST rules, and as prescribed in the CGST. In other words, any other consideration in cash or kind, which forms part of the transaction, has to be converted in monetary terms, by following rules laid down and added back to the price to arrive at arm's length price. If you ask me what is the arm's length price is the price that you actually charge from persons who are not related, or even if you are able to value that phone, for example, you are giving a old phone to the new phone and you are valuing that phone and then you have paid the balance amount, if you are able to accumulate and arrive at it, then it should be done as per the CGST rules. So because price is not the sole consideration, the condition 2. This has this implication, because you all know indirect taxes were always based on the ad valorem basis, is what I already told in the introduction. Considering it, it is very important and significant for the authorities and even the learned people under the GST to understand the implication of central excise fiat judgment. This is an apex court judgment. So if you are able to understand this judgment, it had a huge implication and it actually brought many amendments and clarification under the indirect taxes regime and even under the GST regime. In 2019, there was a circular issued 18/5/2019, GST dated 1/1/2019, para 2, para 2 as well, which is for the purpose of determining how to determine in certain situations how to determine the foregoing the transaction value, how to determine the value is provided as a departmental clarification. But let us first understand what is this fiat judgment all about. It is a significant judgment and all the authorities might be knowing it. Just for purpose of highlighting it, I would state the facts of the case. In the year 2014, if you see, lots of disruptions were caused in the trade following the decision of the Honorable Supreme Court. The Honorable Supreme Court, in the case of Commissioner of Central Excise, Mumbai versus Fiat India Private Limited, 2012, 283 ELT 161 Supreme Court judgment. In the said case, the assessee company was selling a particular model of their car at a price lower than the cost. Now the question from the authorities or the people who are participating, why should the company sell a particular car below the cost? Because they will incur loss. Because the company thought it is very, very important to penetrate the market. The objective was to penetrate the market, so they took a decision to sell the car below the cost of production, for an unduly long period of time, with a view solely for the purpose of penetrating the market. This is an unusual scenario. It is not a usual scenario. Accordingly, the department, such transaction value was held to be not accepted as assessable value. The department, the Commission of Central Excise went on to argue that this is not acceptable as assessable value for the purpose of levying central excise duty at that point of time. I am talking about this case is in 2012. We got the GST only in 2017. So we must know at that point of time central excise was prevailing. There even ad valorem basis and transaction value of the similar nature of valuation was applicable. At that point of time, the department did not take the assessable value as declared by the assessee as the value for the purpose of computing the central excise. Accordingly, such transaction value was held to be not acceptable as assessable value for the purpose of levying central excise duty. So the matter went into litigation. On approaching the matter went up to the Supreme Court, the Apex Court. On approaching the Honorable Apex Court, it was again observed that merely because it was observed by the Apex Court, merely because the assessee has not sold the products to the related persons and the element of flow back directly from the buyer to seller was not the allegation in the show cause notices issued, the price at which the assessee has sold its products to the wholesale trader cannot be accepted as normal price for sale of such products. The Apex Court went on to discuss the meaning of the expression sole consideration. That is the point I wanted to drive here. What is meant by sole consideration is provided under the Apex Court judgment of the fiat, and accordingly I would like to quote certain paragraphs of the judgment so that it provides insight to all the participants here, so that whenever you have a doubt regarding what is the meaning of the sole consideration, it is important that we must take into consideration the judgment of Fate India Private Limited, which was issued in 2012 by the Supreme Court, Honorable Supreme Court. Now, let me quote the 53rd para of the Supreme Court judgment. I quote, now what requires to be considered is, what is the meaning of the expression sole consideration? The apex court went on to say, consideration means something which is of value in eyes of law. Something which is of value in the eyes of law, moving from the plaintiff, the complainant, the plaintiff, either of benefit to the plaintiff or of the detriment to the defendant or the detriment to the defendant. In other words, it may consist either in some right, interest, profit or benefit accruing to one party or some forbearance, detriment or loss or responsibility given, suffered or undertaken by the other, as observed in the case of Curie vs. Misa 1875. It was an English court judgment that which they quoted. And they also went on, if you see the para 56 of the judgment, they also went on to research about the dictionary definition. They have Webster's third new international dictionary, unabridged, defines consideration thus: something that is legally regarded as equivalent or return given or suffered by one for the act or promise of the another. Again they went on, if you see 55, they went on to quote about in volume number 17 of Corpus Juris Secundum, the import of consideration has been described. They have taken various definitions of the meaning of the consideration or to be found in the textbooks and judicial opinions. A sufficient one as stated in the Corpus Juris and which has been quoted and cited with approval is, that is, they said, a benefit to the party promising or a loss or detriment to the party to whom the promise is made. At common law, every contract not under the seal requires a consideration to support it. That is, as shown in the definition above, some benefit to the promisor, some detriment to the promisee has to happen. Even Salmon, in para 56, the Supreme Court relied on the clarification provided by Salmon as part of the jurisprudence. The word consideration has been explained in the following words. I quote, in the judgment, a consideration in its widest sense is the reason, motive or inducement by which a man is moved to bind himself by an agreement. It is for nothing that he consents to impose an obligation upon himself or abandon or transfer a right. It is in the consideration of such and such a fact that he agrees to bear new burdens or to forego the benefits which the law already allows him. So accordingly, based on the above discussion that is provided by the apex court in the Fiat India case, which was concluded in 2012, which had a great implication in 2014 because of the Supreme Court judgment. Based on the above discussion, it was held that important requirement under section 4 subsection 1 clause A of Central Excise Act 1944 was that price must be a sole and only consideration for the sale. If the sale is influenced by considerations other than the price, then section 4 subsection 1 clause A will not apply. In the instant case of Fiat judgment, the main reason for the lessee to sell their cars at a lower price than the manufacturing cost and the profit was to penetrate the market, this constitutes extra commercial consideration. So the Supreme Court went on to say, as you are selling the product below the cost of production, that act of selling the product, selling the car below the cost of production and not profit is foregone, then it is sold below the cost of production. That means effectively the company is incurring losses. Why are they incurring losses? Why did they take this policy decision? Because they took this policy decision to penetrate the market, and accordingly, and not the price is not the sole consideration. So that this extra commercial consideration and not sole consideration to settle the baffled industries and arbitrary proceedings of the department in the guise of the Fiat judgment, there came a circular number 979/03/2014 CX dated 15/1/2014 was issued by the CBIC to clarify that mere sale of goods, I quote, mere sale of goods as part of the circular, mere sale of goods below the manufacturing cost cannot be taken as the sole basis for rejecting the transaction value. and also laid down the procedure to be adopted by the field officers to identify cases where the ratio of the officer judgment would apply. So what is the ultimate conclusion of this case? The case went on to say this constitutes extra commercial consideration and not the sole consideration. That was a Supreme Court judgment. But department went on to give the clarification, a circular, that even if it is sold, cannot be sold below the manufacturing cost, which is the policy decision of the company. Accordingly, a sole basis for rejecting the transaction value, and they also ordered the field officers to go and check what is the implication of the Supreme Court judgment. Later on, it is very important to understand, before I actually bring this judgment and show the implication of the GST Act, that in Union Budget 2014, an amendment was made in Rule 6 of the Central Excise Valuation, Determination of Price of Excisable Goods Rules 2000, that where the following proviso was added, while notification number 20/2014, where the Central Excise dated 11/7/2014 provided that where price is not the sole consideration for sale of accessible goods and they are sold by the assessee at a price lesser than manufacturing cost and profit, no additional consideration is flowing back directly or indirectly from the buyer to such assessee. The value of such goods shall be the transaction value. This is a notification that was issued in 20/2014, dated 11/7/2014. The Supreme Court judgment came in and it had a huge implication on the trade and huge implication on the trade, and the department gave a circular on 15/1/2014, and subsequently there came a notification where the Union Budget 2014 amended and said that the sole consideration here, selling the product, selling the particular car based on the judgment. So if they were selling a product below the manufacturing cost, foregoing the profit, you incurring a loss, and selling below the manufacturing cost will not will ensure, even if you are selling the product below the manufacturing cost, then that sale, what you are doing for that value, that will be considered as the transaction value. That is the spirit of the notification. The insertion of this provision to some extent made it clear where goods are sold at a price lesser than the conclusion of this entire episode of Fiat. What we are trying to understand, why did I quote this while I am discussing about the transaction value and price is the sole consideration, is because it still holds good. This notification still holds good, even though the Central Excise Act may not be applicable to that value of goods or services under the GST, but the principle enunciated under this notification is very important to be observed. Under the GST scenario, the insertion of this provision to some extent made it clear where goods are sold at a price less than the manufacturing cost or the production cost and no additional consideration is flowing from the buyer either directly or indirectly, then the value of such goods shall be deemed to be the transaction value. But the question of determining the flow of indirect consideration to the supplier remained a subjective issue. Similar issues can be faced under the GST. Regime also, since no parameters have been set forth to determine the indirect flow of consideration. I am trying to highlight, you are all learned authorities here sitting for a knowledge sharing session. You all know it already. What I am highlighting here, similar situation you might find while you are dealing with the revenue authorities are dealing with the suppliers or the people who are collecting GST and paying to the government, that you will understand similar issues can be faced in GST regime also, since no parameters have been set forth to determine, even under the GST scenario, there is no parameters set forth to determine indirect flow of consideration to the supplier. If any of the officers here or the higher authorities here who are having discussion with the GST council, who can actually have the knowledge flow to the GST council, it is very important to highlight them about this scenario. That is, The similar issues can be faced in GST regime also, since no parameters have been set forth to determine indirect flow of consideration to the supplier. GST law only mentions that price should be the sole consideration. It does not go beyond that. It does not go beyond that. So price should be the sole consideration for the transaction value to be considered as the value of supply. There is absolutely no explanation to the term sole consideration. If you want to know what is sole consideration, you have to go to the fiat judgment. Look at para 50. Look at para 53. Look at para 54. Look at para 55. Look at para 56. Look at para 57. Look at para 58. Look at the circular issued under the Central Excise. Look at the notification issued under the Central Excise Act through Union Budget 2014. Only then you can understand sole consideration. But what is the situation under the GST law? The GST law itself should provide what is the definition of the sole consideration. But unfortunately or fortunately, the GST law does not provide the definition of the sole consideration, and accordingly we must know that there is absolutely no explanation to the term sole consideration as the GST. Further, no such proviso was inserted in the excise law while Union Budget 2014 finds place in GST law or rules which clarifies mere selling of goods at a price lesser than the manufacturing cost or production cost does not necessarily mean the price is not the sole consideration. Hence the cases where goods are sold. So the conclusion, where the goods are sold at a price lesser than the manufacturing cost or the production cost may be again disputed under the GST. So this is a point of dispute, and I am very sure the judgment of fiat will come in handy and the notification under the Central Excise will come in handy. But what is the scenario under GST is yet to be clarified by the GST authorities and the GST Council. Who is the authority to decide this matter? It is the GST Council. This has to be debated because this is a very crucial point, because in the COVID situation, post-COVID situation, people would like to sell off their products as a supplier. So definitely if they are selling below the manufacturing cost, because they wanted to have the trade to pick up. So what is the situation, whether it is a transaction value considered or not considered, is a point of debate. It's a point of litigation. So I hope I gave a insight into the condition 2. If there are any questions, I would take up the questions. If there is a question in chat box, I would take up question, because this is a very important point which attracts litigation at this juncture. I would like to take up questions and we can have a knowledge sharing as well. If any of the officers and authorities across the nation, if you have come across this situation, I would like to have a kind of a conversation in this training session. Srivatsan sir, is there any question on this matter?
Sir, we are just waiting for the questions in the chat box.
Yeah.
So I don't find any questions in the chat box yet.
No problem, Rajagopal sir. Srivatsan sir, thank you so much. Thank you. Let us move on to I am sure, the fourth part of the discussion, the conditions, when the conditions are not fulfilled, then the transaction value is rejected, and I told you what is the possible litigation situation that could arise for the condition 2, which is very, very significant, especially the COVID-19 time, when the trade actually wants to sell products even below the manufacturing cost. At least they wanted to recover minimum cost because the products are not being sold. Whether this point of litigation even will apply and the GST is a big question, because the Central Excise Act only provides a clarification. It only provides a circular. It only has the judgment in the Central Excise. Whether the judgment which was decided and the notification that was provided, whether it will have an impact under the GST has to be clarified, and if required, the GST Council should provide or add an explanation defining what is sole consideration. This is my humble suggestion. I am sure that authorities here, learned authorities are here, who can influence, who can try to provide insights and representation to the GST Council, and definitely we can bring in the change. Let us move on to the next area of discussion, the fifth area of discussion. I may not be able to cover the entire valuation because my insight which I have is about 70 pages insight I have, which I have researched as an issue under the valuation. You tell me any scenario, I can give you situations of issues under the valuation, but I'll try to cover maximum insights. Maybe we can, if it is so interesting and we can have, if you want to have one more session, I'm ready to do one more session, but I'll try to provide deep insights in each and everything that I discussed. Let us move on to the next area of the discussion. The next area of discussion is compulsory inclusion of expenses taxes and duties in value of supply. How do you determine the value of supply? Certain things has to be included, certain things has to be excluded. So what are the compulsory inclusion of expenses, taxes, duties, etc. in value of supply, etc. in value of supply? If you see section 15 subsection 2 of CGST Act, the value of supply shall include the following. If these are not already included in the price actually paid or payable of supply of goods or services. How do you arrive at the value of supply? That is a situation that we are discussing. What is included in the value of supply? First point to be understood is taxes, duties, cesses, etc. other than GST Act has to be included. Any taxes, duties, cesses, fees, charges levied under any law for the time being in force other than the GST Act, the SGST Act or the UTGST Act, IGST Act or the GST Compensation to States Act, if charged separately by the supplier, shall be included in the value of supply. Shall be included in the value of supply if it is charged separately. It means, what does it mean? It means that the taxes which are not subsumed in GST shall form part of the value of supply for levying GST. Definitely, the entire reason that we've got the GST is to have the ensuring that cascading effect goes away. The cascading effect will go away only to those taxes or the duties which got subsumed under the GST. What happens to the other scenario? What happened to the other taxes which is not subsumed under the GST? All those taxes which is not subsumed under the GST will still form part of the value of supply on which the GST will be levied. So, let me give an example to it, to you visualize the situation. This is example that I am providing will help you to visualize the situation. Since central excise duty continues to be levied on tobacco, I repeat, central excise duty is continued to be levied on tobacco along with GST. Then central excise duty shall be included in the transaction value for supply of tobacco. Central excise duty will be included in the transaction value of tobacco for the chargeability of GST under section 9. I hope I am very clear. So, the central excise duty continues to be levied on tobacco along with GST, then central excise duty will be included in the transaction value for supply of tobacco for the chargeability of GST. Alright. Second, XYZ developers. Second scenario. Imagine visualize the second scenario. XYZ developers subleased the plot received from GNIDA for a term of 99 years. Leased to a buyer. In lieu of lease premium. While determining the value of supply for discharging GST, on lease premium, applicable stamp duty shall be added. I repeat, XYZ developers subleased the plot received from GNIDA for a term of 99 years, to a buyer, in lieu of lease premium. He charges lease premium. Now, while determining the value of supply for discharging GST on lease premium, here even this is a supply. Under the GST, what is covered is supply. For that supply, you get lease premium. Here, the leasing is also supply. Leasing is covered under supply. Then, accordingly, lease premium is taxable. So, it is charged for GST under section 9 of the GST. So, accordingly, GST is on lease premium is applicable. Applicable stamp duty also shall be added. So accordingly, you must understand in this scenario the lease premium along with stamp duty on which GST will be applicable. I hope you can understand, because stamp duty has not got subsumed under the GST. All right. So there are other issues also under the compulsory inclusion or expenses. These are all just addition and exclusion, but I am trying to provide the issue based discussion here in this session. Let me move on to the next point. Amount liable to be paid by supplier but incurred by recipient. Okay, before we get into this discussion, actually I wanted to refrain from discussing this judicial outlook with respect to statutory contributions, compulsory levies as included in the value of supply. But anyway, I wanted to highlight this before I get into the amount liable to be paid by supplier but incurred by recipient. Before I discuss that, I would like to provide a judicial outlook. This is a judicial outlook. When I say judicial outlook, it is from AAR, Karnataka in RE NMDC Limited 2020, a recent ruling of the Authority for Advance Ruling with respect to the GST matter. Let me highlight the issues of this case. The facts of the case goes like this. Applicant obtaining land for coal mining on lease from government. You all see many of the landlords obtaining land for coal mining on lease from the government. So for the purpose of coal mining, they got the land lease from the government and discharging GST on royalty paid to government under RCM, reverse charge mechanism, and making a statutory contribution under the District Mineral Foundation of the District and National Mineral Exploration Trust. So we have to understand this facts of the case in detail. There is a landlord, there is a applicant who got the land from the government, leased from the government for the purpose of doing coal mining. For when he does a coal mining, it is an agreement that he has to pay royalty to the government. We all know that. And on which royalty is the chargeable to GST, and on royalty he pays GST. Now as the royalty is paid to the government, it is on reverse charge mechanism that it has to be discharged. The recipient, the person who is, it is not the government is to be remitted. The reverse charge mechanism, the person who is supposed to pay only should remit to the government. To the GST has to be remitted. Accordingly, there is yet another contribution that the applicant, the coal mining, who is engaged in coal mining, has to make. This is a statutory contribution that he has to make under the District Mineral Foundation of the District and National Mineral Exploration Trust. Both contributions are a percentage of royalty, are made in terms of Mines and Minerals Development Regulation Act 1957. Mines and Minerals Regulation Act 1957 under compulsory levies in addition to royalty, or compulsory levies in addition to royalty. Since under GST law, consideration inter alia includes all charges levied under any law of a set, under any law. This statutory obligation comes because of the regulation in terms of Mines and Minerals Development and Regulation Act 1957, and it is compulsory levy based on the section 15 subsection 2, taxes, duties, cesses, etc. other than the GST Act. This obligation, whether to be included or not, was a question that went to the AAR. Aforesaid amounts amounts includable in assessable value for the levy of GST under the RCM payable by the applicant. So it was provided into the Authority for Advance Ruling, Karnataka in JSW Steel Limited, 2019, it was held that it has to be included, the statutory obligation has to be included. Yet another case which I was referring to, undisputedly amount payable to District Mineral Foundation and National Mineral Exploration Trust are on account of supply of services are directly linked to royalty payable being compared as fixed percentage royalty. In case of non-payment of this contribution, there could be no supply as applicant could be barred from extracting minerals. Accordingly, this contribution included in the assessable value for the payment of GST. Again, Authority for Advance Ruling, Karnataka, in NMDC Limited, 2020 it was held. 2019 also same standing. 2020 also same standing, that any statutory contribution is made because there is a requirement under the respective regulation, that contribution is included as part of the GST value of supply of goods and services. I hope there is a clarity with respect to this matter. So this is the issue which I wanted to highlight with respect to compulsory inclusion or expenses or taxes or duties in value of supply. Is there any doubts or any clarification or discussion that we might have to have? Is it okay, sir? Can I continue?
In the chat box.
Okay, thank you. Maybe at the end we may get some questions and some discussions we can definitely have. Now,
at the end we may open the participants to speak back.
Okay.
And we'll enable their mics.
Definitely, sir. Definitely. Let us move on to the next area of discussion. Hope my voice is clear, sir.
Yes.
Okay, thank you. Let us move on to the next area of discussion. Amount liable to be paid by supplier but incurred by recipient. So, any amount that the supplier is liable to pay in relation to such supply but which has been incurred by the recipient of the supply and not included in the price actually paid or payable for the goods or services or both has to be compulsorily included. Let us dwell on this aspect from different perspectives, and I will finally give some departmental clarification also is provided. I will highlight those departmental clarification as well. There are some judicial outlook as well. There are some AARs which are issued in 2019, 2020. So I will try to highlight, and this discussion on this aspect alone is about 2.5 hours to 3 hour discussion, but I will try to provide some highlights on it. Contractual terms to play fundamental role. We will discuss that under, we will discuss the issue. Any liability of the supplier which is incurred by the recipient, any liability of the supplier which is incurred by the recipient shall be included in the value of supply of that supplier if not included, if not already built in price paid or payable for the supply. That is what this section, that is what section 15 subsection 2b provides. Here the terms of the contract between the supplier and the recipient will play fundamental role in determining the liabilities of the supplier or as corresponding inclusion of the same in the value of supply. Thus in a contract, the obligation undertaken by the supplier for making supply of goods or services need to be identified properly, and all the expenses in respect of such obligation must be incurred by the supplier. Otherwise, if incurred by the recipient on behalf of supplier, then said expenses must be included in the value of supply for the chargeability of GST. Now, next scenario. What happens with respect to taxability of free of cost supplies by the recipient? There are certain things the recipient receives free of cost. what is the implication of it under the GST? Commonly seen in the trade, if you see many of the times you go and buy a product, in practice the recipient and the customer providing certain materials to the manufacturer or contractor for various business or economic reasons, inclusion of value of free of cost supplies by recipient and customer in the value of supply has been vexed issue for long. Whether to be included or not included, I am providing free, I didn't charge it, the consideration doesn't flow to it. This is the vexed issue for a long time. Debates have particularly been seen in the areas of works contract, where the contractee and customer supplies cement, steel and other material to the construction contractor on FOC basis. In the pre-GST scenario, let me explain about the pre-GST era. The pre-GST era is prone for litigation again, and I am sure that in the GST also it will be prone for litigation in the days to come until the GST Council provides the clarification or the respective amendment is brought under the Act. In the pre-GST era, the inclusion of value of the FOC supplies in the taxable value as seen in the canton of judgments in various indirect taxes was vexed, and litigative important judgment in this regard came from larger bench of the Honorable Sestat in the case of Bayana Builders Private Limited versus Commissioner of Service Tax, New Delhi in 2013. It was for the period prior to negativist regime. So you all know in the service tax, I think in 2009 or 2010 I suppose, negative list regime came in. Before that there was no negative list, whatever the services that got notified was taxed, wherein it was held that value of goods supplied free by service recipient, not being monetary or non-monetary consideration accruing to the benefit of service provider, would be outside the taxable value as defined under section 67 of the Finance Act 1994. Finance Act 1994, of course you know service tax was levied through Finance Act 1994, but thus not leviable to service tax. This decision was affirmed by the Honorable Apex Court White 2018 GSTL Supreme Court judgment. This is before the negative list scenario. But on the contrary, post negative list regime of service tax, the total amount liable under works contract was categorically specified to be included in fair market value of all goods and services. Fair market value of all goods and services supplied on relation to execution of works contract, whether or not supplied under the contract or any other contract, after deducting the amount charged for such goods or services if any paid, and the VAT if any levied thereon. Now the present scenario under the GST. So I discussed about the pre-GST era, even before the negative list came in, and now I also discussed about what happened after the negative list came in. Let us now understand what is the situation under the GST. Section 15, value of taxable supply and services, supply of goods and services. Value of section 15 subsection 2b of the CGST Act makes a mention that, it clearly mentions that only that amount shall be added in the value of supply which is the liability of the supplier. The position is very clear under the GST. But incurred by the recipient. What does it mean? Let me provide deeper insight into it. In other words, treatment of FOC, free of cost supplies, in GST regime has been made dependent upon pivotal question as to whose liability it was. The basic question under the GST scenario, GST regime has made it is depending upon a single question. You may note down this question. I'm sure that learned authorities will know already, but all those people who first time you are coming across, it's very important to note down this question: whose liability it was. whose liability it was. That is to say, contractual terms will determine inclusion of FOC supplies in value of supply for the chargeability of GST. So while you are scrutinizing or going through this transaction with any of your assessees, it's important that you get the contract from them and look into the contract to determine what is FOC, free of cost supply. Let me give you an example to make you visualize this situation. If you visualize the situation, you will be able to get the clarity on the section 15 subsection 2 clause B. I have tried to provide my insight into this matter. Visualize the situation. XYZ Limited has engaged a contractor. XYZ Limited engaged a contractor for building shed across the premise of factory for 5 lakhs plus GST. The particulars of the contract, I am trying to reproduce from the contract terms. I am giving an example from my own experience without mentioning the client name because I have to I protect the client from the confidentiality. So just I am giving a scenario. Here in this contract, what happened? Contract price includes sand, iron, steel and labor charges 5 lakh rupees. Cement and paints to be provided by the recipient, which is about 2 lakhs. And the GST rate is 18%. That is provided as part of the contract. See, contract price, which includes sand, iron, steel and labor charges. And cement paints to be provided by the recipient is 2 lakhs. And the GST rate is 18%. GST rate is 18%. Here the liability to supply. Here the liability to supply cement and paint is upon the recipient. Cement and paint is on the recipient, that is XYZ Limited. Hence, these FOC, this is an FOC supply. We can find from the contract terms. This FOC supplies by the recipient may not require to be included in the value of supply of services by the contractor. Why? In the post GST scenario, section 15 subsection 2b is very clear. The pivotal question, whose liability it was? That is a question. In this case, the liability, it is the liability of the recipient. And when we looked into the contractual terms, we are very clear in this case. How do you determine the value of the services? Under section 15 subsection 2b, the case of services by contractor shall be 5 lakhs and the GST is about 18%. On 5 lakhs you apply about 18%, you get about 90,000 GST liability has to be paid. Very important point to be noted here. Very important point to be noted here. The point to be noted here is with respect to the input tax credit. Further, no input tax credit of cement and paint shall be available to XYZ Limited for falling under blocked credit. Falling under blocked credit under section 17 subsection 5 D of the CGST Act. CGST Act. See, if you see, the input tax credit is denied. Not denied exactly. There is a blocked credit. In fact, I would like the learned authorities here to enlighten me. I was actually searching for the rationale and the reason why certain credits are blocked under the GST. When the idea of the GST is to have is to avoid the cascading effect and to have a credit fungibility. Why at all in certain times blocked credit is not credit input tax credit is not allowed. Purposefully it is denied under section 17 subsection 5, and here in this case to be specific, section 17 subsection 5 clause D. Goods or services or both received by a taxable person for construction of a immovable property. It is provided in section 17, I quote, section 17 subsection 5 clause D. Goods or services are both received by a taxable person for construction of an immovable property. Construction of immovable property other than plant or machinery. Other than plant or machinery. If it is for the plant and machinery, maybe it is allowed on his own account, including when such goods or services are both are used in the course of furtherance of business. It is blocked credit. So I really have no clue why the government is actually blocking this credit. if authorities can enlighten me as to understand, I just wanted to understand what is the purpose and rationale behind a block credit concept under the GST, when the vision of the GST is to have the credit fungibility and avoiding cascading effect, and anyway this money is going to be utilized, and what is the revenue that the government is going to get because of the section 17 subsection 5 block credit. And you know, the block credit has n number of items under that. It is one of the items that I am discussing. I really wanted to understand why section 17 subsection 5 is prevailing under the GST scenario. However, the point to be noted is input tax credit is not allowed. Now the next insight that we have to go is yet another scenario. Let me give a second point to visualize, second scenario to visualize. Shivachan sir, until what time is our session, sir?
Sir, you can go up to 1 o'clock.
Okay, sir. Thank you, sir. Probably I will cover some important departmental clarification on this matter, sir.
Yes.
Inclusion, exclusion, and then we have further discussions, and based on the time availability, we will later do it, sir. Okay. The second scenario, a scenario to visualize the issue under section 15 subsection 2 clause B. I remind you again about that clause. Any amount liable to be paid by supplier but incurred by recipient. The contractor was given a wholesome activity. I am going to give a second scenario. The contract was given a wholesome activity of constructing shed with all materials and labor for contract price of rupees 10 lakhs. Contract price of rupees 10 lakhs plus GST as applicable. So it is a 10 lakh worth of contract. However, XYZ Limited supplied cement and paint worth of about 2 lakhs on FOC basis to contractor. We all know a straightforward scenario where this will not be included and you will not be eligible for the input tax credit even for the amount that you are taking as a contractor. Here the obligation for providing the cement and paint was of a contractor but supplied and incurred by the recipient. Thus the contractor will raise an invoice. Contract value is 10 lakhs. Here there is no demarcation provided between what is the recipient. Recipient value is about 2 lakhs is that he is supplying as part of the contract on a FOC basis. Free on cost. So thus the contractor will raise an invoice of 8 lakhs to XYZ Limited. But the value of services by contractor shall be 10 lakh, that is 8 lakhs plus 2 lakh for the purpose of charging GST, and the GST shall be 1,80,000 because 10 lakh into 18% on value inclusive of free of cost supplies of cement and paint, which is obligation of supplier but incurred by the recipient. In this case, if you see, in the first case when I told there is no cascading effect. In the second case, if you see, there is a cascading effect. Why at all 10 lakh is taken and 18% is charged on it? It may be noted that the cascading effect is taking place in this case as the contractor is charging GST on value inclusive of FOC value, cement and paint supplied by the recipient. But please understand, but no ITC of GST will be admissible to XYZ Limited on purchase of cement and paints as barred. I repeat, it is straight away barred by section 17 subsection 5 clause D of the CGST Act, and therefore it could be a cascading effect on both the sides. GST credit is not available to XYZ Limited on procurement of cement and paints, and again the value of FOC supplies of cement and paints will be added for arriving at the valuation of chargeability of GST by contractor 8 lakh plus 2 lakh, and no credit of GST is available which is chargeable on 10 lakh in terms of section 17 subsection 5 clause C. Clause D prohibits the input tax credit on the contractor for the works contract, and section 17 subsection 5 clause C again prohibits with respect to the GST input tax credit. So in this scenario, there is a clarification provided by the department. This is a tricky scenario. The department stepped in. The above view is well fortified by the clarification issued by the CBIC in respect of applicability of GST on FOC molds and dies. This clarification is provided on 8/6/2018. It's a departmental clarification. The clarification is clarification applicability of GST on FOC supplies of molds and dies by OEM to a component manufacturer. This has to be understood in detail. Moment you understand this in detail, I will also give my insights which I have seen in this department clarification as well. I will try to provide a deep insight into it. The first point to be noted, under the circular 47/21/2018, GST dated 8/6/2018, prior to above clarification, it was long debated as to whether the amortization of molds and dies cost should be added to the value of supply. Let us come to this situation. By understanding this scenario, you will be able to get answers to many other scenarios. Prior to the above clarification, it was long debated as to whether the amortization of the molds and dies cost should be added to the value of supply, that is job work charges charged by the component manufacturer for the chargeability of GST. This was a long debate since the time the GST got introduced. In this regard, it is very important to get into the details of para 1.1 to 1.3 of the stated circular, giving reference of provisions of section 15 subsection 2b of the CGST Act clarifies as under. Scenario 1, scenario 2. I am going to provide the clarification in two scenarios under the circular. Scenario 1 says molds and dies owned by original equipment manufacturer. If the molds and dies are owned by original equipment manufacturer and provided to a component manufacturer, you all know how the value chain of a OEM function. There are many companies across the nation who are all OEMs. Maybe electronic industry primarily operates in the OEM model. So, molds and dies owned by original equipment manufacturer and provided to a component manufacturer on FOC basis is not a supply. Hence, cost of such molds and dies are not to be included in the value of supply. This is the first scenario I am talking about, made by the component manufacturer. Further, since the molds and dies are provided on FOC basis by OEM to the component manufacturer in the course or furtherance of his business, there is no requirement to reversal of input tax credit availed on such molds and dies supplied by the OEM. There is no requirement to reverse. This is the first scenario which we can decipher from the circular. The second scenario, if contract exists between the OEM and component manufacturers for supply of components made by using the molds and dies belonging to the component manufacturer himself, but the same has been supplied by the OEM to the component manufacturer on FOB basis, then amortized cost of such molds and dies shall be added to the value of such components. In this case, molds and dies were owned by in the first scenario, molds and dies were owned by the original equipment manufacturer. In the second case, if contract exists between the OEM and component manufacturer for supply of components made by using the molds and dies belonging to the component manufacturer, then but the same have been supplied by the OEM to the component manufacturer on FOC basis, then amortized cost of such molds and dies shall be added to the value of such components. Further, input tax credit is required to be reversed by the OEM on such molds and dies, as the same will not be considered to be provided by the OEM to the component manufacturer in the course of furtherance of the former's business. What does this two scenario affirm? This circular affirms that free of cost supplies by recipient need not be added to the value of supply till the time it is the responsibility of the supplier to incur. Hence, it is advisable to revisit all such contracts for inclusion or exclusion of value of FOC supplies depending upon above parameter. So it is an insight to the authority. When you are dealing with the OEM manufacturer, it is very important to look into the aspect of FOC, free of cost supplies. Whether scenario 1, whether the molds and dies are owned by the original equipment manufacturer, or the second scenario, if the contract exists between the OEM and contract manufacturer, component manufacturer for supply of components made by using the molds and belonging to the component manufacturer. In both the scenarios, it is very important, look at the agreement. Agreement only can be a driving factor under the GST. What is important is to understand the business and the value chain of the respective industry and respective client. Industry may be operating in a very different scenario, but a particular client will operate, particular assessee will operate in a particular way. So it is very important to look into the contractual terms to understand their value chain, impact on the value chain of the contract. So my view, which I wanted to provide as part of this circular, it is an insight from my side. It is not an authoritative circular, neither a department clarification, neither there is a judgment or AAR. In a typical contract between certain contract specifically requires component manufacturing. In a typical contract where the contract specifically requires component manufacturer to procure mold and the same is given to him by OEM for free, then the component manufacturer would generally agree to get the payment towards value of mold deducted from his invoice to OEM. Now, seemingly, it is very important, it is a business practice. As per above circular, OEM is allowed to avail ITC only under scenario 1 because he is owning the molds and dies. And the mold is considered as not used in the course of furtherance of business of OEM under scenario 1. Even though OEM has procured the mold by himself in both the scenarios, this seems to be an artificial restriction in ITC in case of the scenario 1 which I told you. To tackle this situation, it is very, very important to avoid the loss of ITC in such cases. It may be prudent, it is not my opinion, I am just a suggestion. It may be prudent for the OEM to raise tax invoice for the supply of mold to component manufacturer. It is very important and prudent, which is equivalent to reversal of ITC by OEM contemplated in the circular, and the component manufacturer can in turn take ITC of GST on the mold and utilize such ITC towards payment of GST on supply of component, including the amortized value of the mold in the transaction value as per section 15 subsection 2 clause B of the CGST Act. Now I am not going to leave this matter. Let me bring this matter to the conclusion. I am going to refer to the recent 2019, I would say, recent 2019 Authority for Advance Ruling, Maharashtra in rain with respect to Lear Automotive Limited, Private Limited. As per amortized, this is the judicial outlook with respect to the amortized value of the tool received on FOP basis, not required to be included in the value of the finished goods. Here, as per the agreement, customer to pay the applicant the tool cost for development and manufacture of tooling. So this is the fact of the case. In most of the cases, applicant gets the tool developed from third party, a kind of subcontractor, by involving its engineer on receipt of product from the third party. The same is sold to OEM, for which tax invoice is raised and applicable GST charged. Thus, absolute ownership of the tools get transferred to OEM, but physical possession remains with the applicant during the manufacturing process. Accordingly, amortized value of the tool received on FOC basis from the customer not required to be included in the value of the finished goods manufactured and supplied by the applicant to the customer. It was held with the Authority for Advance Ruling in the case of the Maharashtra Lear Automotive Limited, Private Limited, 2019. It was provided. So there are different scenarios we will cover in the days to come, maybe based on the next session. If you have any questions, I am ready to clarify. We have tried to cover very important departmental clarification and judgments, but there are many more judgments that need to be covered and many more departmental clarifications and ARs with respect to valuation. It's a very interesting, there are very interesting scenarios which I have captured as part of my 70 to 75 pages write-up, where over a period of time I'll be sharing the same with the participants over a period of time. So, Srivatsan sir, there are other points to be discussed. Due to the shortage of time, based on the request of the participants and the feedback, we will have more discussion, in-depth discussion about compulsory inclusions of the expenses and taxes and duties and in value of supply. That itself is about 2.5 hours discussion, which we should ideally be having a discussion and knowledge sharing. So we will do it at any point of time shortly based on the convenience of the NACIN. If there are any questions, I am ready to take up. It's already almost 1 o'clock, so we will have a question answer session and discussion. And I would feel free to, I will feel free to have a discussion. And I could see many of the authorities whom I have met across the nation present in this session. My special wishes to my great role model, the great, we have met many times and role model as well for many authorities here. Bhagya Devi ma'am, I met her in Delhi, National Anti-Profiting Authority, when she was there is what I understand, and even when she was here. Thank you so much for joining for the session, and I recognize all the presence of all the officers who are here today with respect to understanding this implication. I am sure that I added value with respect to these matters. I am sure we will have in-depth discussion on this matter in the days to come.
Yes, sir, fine. I for to say, given the privilege to the participants to unmute themselves and participate in the discussion. If any of the participants wants to have discussion or speak on the topics covered by sir, they can unmute themselves and speak, please. Any doubts, any discussion or any point to ponder, anything can be shared, and the participants can unmute themselves and then share their views, or they can also put it in the chat box, which I will.
Good afternoon, Sathya, can you hear me?
Yes, ma'am. Yes, ma'am. How are you, ma'am?
Thank you for the
Thank you, ma'am.
word.
Thank you, ma'am.
Yeah, I was listening to your lecture. It's good. I mean, in detail, you have covered the subject.
Thank you.
Maybe probably if you had also shared some data on the screen.
Yes, ma'am.
It would have been
Yes,
good,
ma'am.
I felt.
Yes, ma'am. Definitely, ma'am.
It was a really good discussion.
Yes, ma'am.
It really helps the participants.
Definitely, ma'am.
Thank you.
Thank you, Bhagya Devi, ma'am. Thank you, ma'am. Thank you. Thank you so much for joining.
The participants, any doubt, any points, any counterpoints, or anything which you would like to get not finding anyone unmuting themselves and speaking. Let me just check the chat box. Anybody? But I have one or two small questions. I am Balaji, Superintendent from NACIN Chennai.
Yes, yes, sir. Yes, sir.
So since there is briefly off from the session, I am just moderating. I have at least one doubt in the sense, you are talking about the amortization issue as clarified by the circular as the last point.
Yeah.
So it boils down to how we put the contract. It just boils down to how we put the contract, is it not? It is just
Yes. It's a business case.
Artificial thing which can be easily come over by suitable framing of the contract.
Absolutely.
So, any prudent businessman will have the contract so framed just to avoid amortization of the tool cost into the component.
Yes.
Or foregoing the ITC or whatever it is.
Absolutely, sir.
Then why such a fine line should be dividing the inclusion of the FOC in the
Yeah, I think my understanding, sir, definitely would have seen this kind of a scenario. Any prudent businessman will do it. But when the GST came in, there was no particular clarification on this matter. So many of the contracts will exist for with respect to OEM electronic industry. They don't enter the contract just for 1 year. Certain times they enter the contract for 5 years or 4 years or 3 years. So this department clarification is a value addition to those people who have entered into the contract already. Now, with respect to the contracts that people are going to enter shortly or who have seen this clarification where they have cancelled the previous contract, to ensure that they, as you said in that kind of a scenario, any prudent businessman will revise the contract. I think my understanding, looking at this clarification, this is my view, maybe authorities may have a different view altogether. My view is to the GST is trying to align itself to the business needs and it's moving towards the prudent, the pivotal question is that the department is trying to look at from the department clarification perspective is to say that over a period of time you take the benefit of what we have provided, scenario 1 or scenario 2 as the case may be, and to ensure that you utilize this, what is my understanding, sir. So maybe in future GST Council or because of the influences that authorities might have on the GST Council over a period of time through representation model, I am sure that the GST might be reformed, but considering the pro measures that the government is taking, pro industry measures the government is taking, they may not avoid this scenario, sir. That's my understanding.
Yes, so the thing is that so long as there is no consideration for the supply of the tools and dies, whether owned by, whether it is contractually to be supplied by the OE manufacturer or contractually to be created by the component manufacturer, so long as there is no flow of money.
Correct.
Ideally, there should not be any
Yes.
tax liability.
Yes. So that is where Balaji sir. Absolutely right, sir. What point you made is absolutely right. That is where when I started the discussion, when I went to the Supreme Court judgment of 2012 of the Fiat case and subsequent union budget amendment, I went on to say that the central excise had that kind of an insight, but GST did not have that insight.
And that was with regard to the Rule 6 of the valuation rules where breaking into the market is amounting to additional consideration.
Exactly, sir. Exactly. So that GST is not considering that scenario, but however we have a precedence under the central excise. The question is whether that ruling will prevail over the GST or the GST Council over a period of time, they might consider these issues and amend. They might bring an amendment to the scenario over a period of time is what we are looking at, sir. This has to be highlighted to those people who are assisting to the GST Council, either the union government or the respective state governments to represent this matter, to bring a clarification to the industry. That's what I want. They may take a pro-industry or they may be taking a different stand, but I think the stand has to be taken is my understanding, sir.
I have a small corollary for this
Yeah.
issue.
Yeah.
Simply, one issue was just asked. It may be academic or it may be a real life scenario, I don't know. So, there is an organization and there are certain landowners. It is not a construction industry, it is an agriculture based industry. So, there are certain landowners and there is a commercial organization. Commercial organization wants to take the what are grown in the land for the commercial utilization.
Correct, sir.
So they enter into contract with the individual landowners to grow a particular item, so that the commercial identity will take the growth out of it.
Correct,
Severing from the land, they will take the growth.
Correct, sir.
But for the farmers to make a good yield of it, they give some technical advices. They give the maybe the seeds or whatever it is, or the saplings or whatever it is, and then they also guide the farmers, guide the landowners for the proper growth of the agricultural produce or whatever it is. So at the end of the day, the contract says if the market value of the growth is say 100 rupees, so it will be shared in a particular ratio between the landowner and the commercial organization.
Absolutely,
the commercial organization will take the growth and they will use it in the commercial organization for production of the further material.
Absolutely, sir. Absolutely.
Suppose if the market support price is 100 rupees, the farmer will be the landowner will be paid 50 or 60 or whatever it is.
Yeah.
Now, maybe the what is grown from the land may be exempted because it is an agriculture produce.
Correct.
Or whether or not, let us not go into whether the product grown is exempted or taxed. Let us not go into that. But
the service.
Since this advice, that supply of sapling or seeds or fertilizers or whatever it is, or the expertise advice from the commercial organization to the landowner, will there be any tax liability in this setup on the commercial organization for the consultancy services or the supplies made or free of cost made or something like that?
Definitely, if there is is the charge collected, sir? Is there a consideration flowing?
Suppose if it is 100 kg is the yield out of the land. Suppose the market support price is 1,000 rupees
Yeah.
per kg.
Yeah.
It is 1,100, and the farmer and the landowner will be paid a pre-arranged ratio of that amount.
Correct. I got it. For example, it typically happens in a village scenario where they might be getting at a concessional rate. Is that point that you're making? For example, 6 months munadi.
Not exactly paddy or something like that. It may be any other product.
Okay.
Which is of a commercial use.
Commercial use, I understand.
Commercial use in the manufacture of some other commodity.
Definitely, this scenario requires a clarification. That's where that we lack the guidance or the with respect to the indirect or direct flow of commercial with indirect or direct flow of benefit. So I think this scenario typically is like a scenario of the fiat. Is my understanding? Am I right, sir?
It is just like a scenario of free of charge, instead of supplying molds and dyes.
Correct.
They are supplying the expertise.
Correct. So it definitely requires a clarification from the department, sir. But however, going by the vanilla scenario, it will be taxed.
But what I thought was based on the same circular which I quoted, it may not be taxable because the entire benefit is coming back to the person who has supplied the services or the expertise or advice or whatever it is.
Yeah. So, definitely, sir, you are absolutely valid. But going by the vanilla scenario, until we get a clarification as a professional, when we try to deal with the client, I will always say the tax gets attracted, because that's with respect to department clarification is not an illustrative, but it is for the industry.
Okay.
That's my, I will always take a conservative approach, because tomorrow if the demand is raised and then the client should not suffer, considering we may take the technical guidance and enlighten them, but from the perspective of tax liability, I think that industry is different from this industry. The specific transaction requires a clarification from the department. The clarification is a clarification for the respective industry, and it is not for the cross industry and other even AARs. I think it is only a guidance, but scenario to scenario the AARs can vary, is my understanding, sir.
Is there any other view that can be shared by the participants?
That's a fantastic question, Balaji, sir. That's a fantastic question, actually. Yeah.
No, actually it is not coming out of mind. I was asked this question. I had my opinion and said it may not be taxable.
Oh.
But I just thought.
Yeah.
I just thought it's academic, so that
Yeah.
I am not revealing most of the details.
Correct.
Just putting it
Correct, sir.
generic.
Correct. I think what you said is absolutely, that possibility also could emerge by taking guidance from this molds and jigs. So from the OEM, so typical.
Drawing, molds, dies, whatever
Yeah.
it is.
The value chain and the implication of the case is almost the same, but the department clarification is not addressing to that particular industry, but it is addressing to the different industry. But that guidance could be taken, is my could be taken because there is no, with respect to departmental clarification, I feel it is for the transaction wise and not for the industry as such, is my understanding.
Yes, point taken. So it is. So as a department person, we normally say it's not to be well much at the time of issuing of a notice.
Yeah.
Of course, there can be a reply, there can be an adjudication, or appeal, and whatever it is.
Absolutely.
But I'm just thinking about the academic angle.
Absolutely, sir. Absolutely, Balaji, sir. Good point, sir.
Any other participant would, since there was a lull in the discussion, I just thought I would throw some points so that any other participant would like to have their view or their. I think it's 1 o'clock. I've taken 5 more minutes from you than what was already scheduled. Thank you, Mr. Sathya Kumar, sir,
Thank you.
for having spared your
Thank you, sir.
valuable time. I hope everyone has enjoyed the session.
And thank you so much to NACIN, and initial times of GST, NACIN trainings I've handled in Gujarat and many of the places. In fact, some of the sessions, Bhagyadevi ma'am has been our chief guest, and in Chennai, and we have had an enlightening discussion with the authorities. In fact, it's a beautiful platform where we share knowledge, because this GST as such requires a lot of clarity, because industry as such are not aware what could be the perspectives they can drive. There is no literature available, and on this scenario, these kind of trainings provide us an opportunity. Definitely, here I have not come to even teach, but it is about sharing and then trying to provide an overview of the aspects. And thank you so much for the NACIN under the leadership of KSSV Prasad sir for giving this opportunity, and it's a great time that we have today, and I'm sure that in the days to come we'll have much more enlightening discussion. Thank you so much.
Yes, sure, sir. Thank you. We also look forward to your future issues. I request the participants to kindly mark their attendance and the feedback. We have posted the Google form in the chat box. I request all the participants to take a minute or so to kindly access the Google form which is posted in the chat box and record their feedback and their suggestions to take these kind of lectures in the days to come.
And I'll also provide my contact details. Maybe if there are any suggestion or any of the ideas which we have shared to have a conversation, and I will try to provide my contact details. 988449226. 988449226. So any points to be highlighted, probably you can, and any of the questions or anything we can have a conversation. Definitely, I'm always available. Thank you so much to all the authorities to be present here across the nation. Thank you.
Thank you.
Thank you. Thank you so much.